In today's bond markets, the 10-year was a big mover, as were all the major bond markets, but the 10-year note was one of the biggest movers today. We saw a big reversal today. The 4-day rally in the 10-year note came to a halt today, and basically now for the week it's in the middle of that range. We saw a high of 2,697. So 2.697 was the high for the day, currently around the 2,691 level. Now we did see it start today at the 2.635 level. So as you can see, quite a significant jump in the yields with prices coming under some selling pressure. And a couple of the factors playing into this reversal today, potentially, I think number one, economic reports. Now we got a very strong jobs number, and many people are pointing to that number as being the driver for the reversal in the bond yields, but I'm not so sure, because after that number came out, we saw the bond yields basically hover around that 2.64 level. It was really the later numbers that pushed the bond yields higher, prices lower. And when I look at those numbers, you had the ISM manufacturing number, we had a consumer sentiment number, and we also had construction spending. All of those came out higher than what the market had anticipated, particularly when you look at the PMI manufacturing number. It came in at a reading of 56.6. So again, up from the 54.3 reading from last month. So therefore, the expectations were for that number to come out flat or lower, came out higher, and that was really, it appeared to be the catalyst for pushing yields higher throughout the day. Another factor playing into the pricing mechanisms today was the trade negotiations. We came to basically the end of the trade negotiations between China and U.S. for the week, but there's a lot of talking points today. Larry Kudlow, economic advisor to the president, was out talking about the good vibe that came out of the trade negotiations. Again, there seems to be at least some movement there, and the perception is that they're making some headway towards that March deadline. And also, we had some Fed speak this morning as well, coupled in with some of these news releases. And we got Fed Governor Bullard speaking today as well, and indicating that they're comfortable with the way things are, but also indicating that they might let the economy run a little hot right now due to the fact that we're not seeing any significant inflation. And I think that also played into the reversal that we saw in bond yields for the day.